What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday, and that means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week and the technical chart patterns of all the major FAANG stocks, including Microsoft, Tesla, Netflix, and NVIDIA, and more on today's show. What is going on, investors? Let's kick things off like we always do with Facebook. Start of the week at 201. Is this deja vu? No, folks, it is not. We ended the week basically flat on this stock, and like a lot of stocks, just like last week, we had these major downswings in the markets only for stocks to rally back into Friday, essentially leaving Facebook stock flat on the week and quite frankly flat over the past 2 weeks. Now, Facebook is cutting spending, slowing hiring, and that is consistent with the revised expense outlook. This is according to BOA. So we talked about this the last time that we did an earnings video on Meta, and we've talked about it broadly here on the show, the fact that this company decided to start reining in its spending on that AR and kind of VR devices. And we saw when we dissected Meta's financials, man, they were losing billions of dollars a quarter on this. Well, they decided to rein that spending in. And Mark Zuckerberg gave a quote on their most recent earnings call, how he talked about how some of their other business, their core business over at Facebook, the online advertising business, that is slowing. And so that is forcing the company to kind of rein in those expenses. Now, it's only going to be a several billion dollars for a full year. On the bull case argument, you can argue that, yes, this will impact EPS. This will impact price to earnings over at Facebook. Probably will make those metrics a little bit more decent, quite frankly. But here's what you want to ask yourself. Do you want to invest in a company that's cutting its investment for the future and also seeing its core business start to slow? Take Facebook's name out of this, take the valuation, take your history of a company. If your neighbor says, hey, I've got a landscaping company, my sales are starting to flatten out and can maybe go down, and I stopped reinvesting in getting new clients, would you really want to invest in that person's business? I think the answer is no, at least in the shorter term. We'll see how Facebook stock performs over this time. I certainly could be wrong from a stock price perspective, but from a fundamental perspective, I tend to pull back my investment in stocks when they start to pull back their investment. Now, Meta Platforms and Advanced Micro Devices, otherwise known as AMD, team up to make a broadband more accessible. This actually really popped Advanced Micro Devices stock. And I don't know that, I mean, almost all stocks in the stock market outside of energy basically is oversold. And so it could be that it got a nice bounce, but we saw that AMD popped big time that day and followed through with another 9% rally today. Moving on to Apple, start of the week at 155. This stock actually did end the week down at about 147. You did have a buying opportunity that I took advantage of. Yet you were south of 140 on this one. I'll show you from a technical perspective. Not a place where I'd would load up on Apple, but certainly a place where I did add some shares to Apple at that time. Now, Aramco, that's a Saudi Arabia energy company. They overtake Apple as the world's most valuable company. I also think this is a pretty good sign that we're reaching some good buying opportunities with some of these stocks. First of all, we're starting to see a flattening of the price action, okay, on a weekly basis. Obviously, day to day, these markets are swinging 2, 3, 4, 5% or more. Some of the more speculative stocks are swinging 10, 15%. But when you stretch this out to a week, 2 week time, we're actually starting to see that price action is starting to consolidate around a little bit of tighter range. Look, I don't study bottoming formations, but from what I have studied in the past, the consolidation of a price is sometimes the formation of a bottom. Now, Apple is to release a new Apple TV later this year. This is on the heels of releasing one just a couple of years ago with a 4K chip and a new remote. We'll see what they decide to add to this one. Obviously, Apple is making a big foray into Apple TV. They're also rumored to potentially get the NFL Sunday ticket rights for the out-of-market NFL games, not for this upcoming NFL season, but the one after that. Certainly, if they do that, they could sell a lot more of these devices. We'll see if Apple decides to do that. Now, Apple iPhone 15 could see a switch to USB-C from the Lightning port. Now, I saw this, and then I saw on Twitter that this isn't coming till 2023. Obviously, we get with Apple this time of year as they move into kind of when they're about to introduce their new products. Not about to, but they're basically 2 quarters away from announcing some new products. This is when we start to see the rumors with these types of things, and we'll see how Apple Apple kind of navigates the difficult environment that we're in. Now, Apple this week discontinued the iPod Touch, putting an end to the iPod brand after 20 years. And it made me think on this news, like, when is the iPhone going to be retired? The iPhone was introduced, I believe, in 2007. iPod had a 20-year run. I'm going to assume the iPhone will last maybe a little bit longer than 20 years, but I think it's safe to assume that maybe the iPhone will be retired one day, and maybe it'll be interesting to see if Apple has a replacement for it at some point. Now, Apple leaked a memo highlighting loss of opportunities and promotions in anti-union push. Obviously, we're seeing with the labor market being as loose as it is, where if you're working at some place and you want to go work somewhere else, well, look, I'm not in this labor market, but according to statistics, it looks like you can move around. That, probably among other things, is spurring workers to unionize, and we're seeing a push at Starbucks, at Amazon, many other companies, and now including Apple. And obviously these companies are doing their best to push back. Apple's sending a memo to employees saying they might be less flexible on things. They might pay less attention to merit. And they say with the union between them and the employees might not make it as good of an environment. Obviously, Apple making their case. We'll see how the workers side on these types of things. Now, an Apple supplier, Foxconn, their main supplier, warned revenue could slow due to inflation and slowing demand. However, we did get some comments out of the company's chairman, and he noted that inflation was hitting demand on the lower end electronics, but have not seen an impact on mid to high end products yet. And with the emphasis on yet, and look, I think you could study inflation. I've certainly been reading books and doing as much research on it as I can as it started to emerge over the last year or so, but that certainly is something that we're seeing. Obviously, the lower end consumer is far more pressured when gas goes from 4 to 6 out here in California. If you were already paycheck to paycheck, that's going to absolutely bury you. But if you're kind of an affluent person or you're upper middle class income, well, look, gas going from 4 to 6 might just be a temporary inconvenience, and you're still able to afford kind of the high end devices. We'll see. We certainly saw evidence of this in Tesla's results. We'll see if Tesla follows through in subsequent quarters, and we'll see if Apple is able to maintain kind of a higher price point despite the inflationary environment. Moving on to Amazon, started the week at 2,267 and basically ended the week almost on the dollar flat of the week. It is deja vu all over again here on the Investor Channel, just a flattening of price. If you're looking for bottoms, this can be a sign. It's not necessarily the telltale sign, but it can be. E-commerce panic sends Amazon to a new 52-week low. This was earlier in the week. Is it time to buy? Look, I did not step in and buy. I'll talk about from a technical perspective why I did not do that. If I had access to fractional shares, I might have with Amazon. We'll talk more about them. Not a lot of news out of Amazon this week. Moving on to Netflix, one of the few that actually did end higher. Started the week at 182, ended the week closer to 187. That's on the heels of Netflix saying ad support may arrive by year end. This actually has me excited as maybe a potential investor in Netflix. I did grab a couple of shares. This was a couple of weeks ago. The market continued to sell off. I got stop lost. My rule is when I start a new position, especially in a stock like pretty much across the board, but especially Netflix, which was literally a falling knife, and it might be my fault for trying to catch that. Might not be great discipline, but I thought I would step in on this stock. I did get stepped out of it, but this is what has me excited about Netflix. However, I did read this report that Netflix move into online sales and online advertising, kind of having that ad-supported option. It might create some challenges for their revenue model. Obviously, you might have people that were on a $12.99 rebill or a $9.99 rebill end up switching to this lower end version. They did talk about how you have ad supported models in developing markets where incomes are traditionally low. Well, people might opt to switch to that. My argument with that is Netflix hasn't indicated what markets they're going to roll the ad supported model out to. My guess is they would roll it out first here in the United States and Canada, and then maybe Europe, and then maybe you go to the developed markets after that. I'm very curious to see how this works out for Netflix. I am not 100% sure whether it'd be a great investment, but certainly one worth watching. Moving on to NVIDIA, started the week at 180. And yeah, if you follow me on Instagram or Twitter. I do have links to those in the description below. Love to see you over there and have a discussion with you if you want to talk stocks on those platforms. Well, NVIDIA dropped down below into our buying zone. We'll see this when we get over to the technical pattern. We've been saying for months here on the channel, south of 160 on NVIDIA was a great buying opportunity, and it was for about a day as the stock popped up later in the week to 177. Again, started the week at 180, ended at 177. If you missed your opportunity on NVIDIA, I'll show you from a technical perspective. I wouldn't be concerned. I think you get another shot here in the coming weeks ahead. Now, Intel showed off new data center chips to compete with NVIDIA and AMD. Look, we see this press release all the time, but here's the deal. Intel earlier in the week said their long-awaited graphic cards for PC called the Arc series would launch in the summer, but also acknowledged some software-related delays in getting the chips to market. Intel always shows stuff off and then just simply cannot bring it to market. And by the time they bring it to market, AMD, NVIDIA have something that's at least comparable and maybe even better. And that is why Intel stock has been the lagger, especially when you stretch this out to kind of a 5-year chart. Intel's basically gone nowhere, whereas NVIDIA and AMD, why those stocks has pulled back tremendously over the past year or so, well, they still have well performed Intel. That's why we continue to recommend those stocks over Intel. Moving on to Google, start of the week at $2,275 per share. This one is melting up nicely, just consolidating at a lower price. We'll see if that holds on the technical segment. Now, Alphabet, which is Google, is likely to highlight their digital ad cloud strength and at the I/O Developer Conference. This was held last week. I believe it was mainly virtual. I did see some interviews on CNBC with the CEO of Google, Sundar Pichai. I think the thing that is really in contrast between Google and Facebook is he talked about how they're accelerating their investment, whereas I just talked about the lead story is that Facebook's actually pulling back on their investments. Now, again, I am not guaranteeing that means Google stock outperforms Facebook. I think there's a lot more into it than just the investment. I'm just saying, me as an investor, I would much rather invest in a company like Google that's accelerating their investments during these difficult times while competition like Facebook is pulling back. I love the fact that Google has their pedal to the metal. Now they showed off a new smartwatch, a new phone, a bunch of different devices, and these certainly will generate revenue and give Google kind of a network effect. But I love that this company continues to invest. Why they have their competitors kind of on the ropes, in my opinion. Now, moving on to Microsoft, start of the week at 270. This one actually showed some weakness. End of the week at 261. We'll talk about it from a technical perspective. Could be pulling into the areas, as you recall last week, Microsoft was kind of in no man's land from a technical perspective, and it kind of showed this week. We didn't really see a strong bounce on this stock, and it ended up down on the week. Now, Microsoft fell below a $2 trillion valuation as NVIDIA, AMD, basically everything fell off earlier in this week. I probably don't need to rub that in, especially if you maintained your long positions like I have. Moving on to Tesla, not a ton of news out of most of these stocks this week, quite frankly. A lot of news out of Tesla, though. Started the week at 837, ended down at about 772. I'm seeing here in the after hours. Now, Tesla dropped below $700 earlier in the week. Again, that was your buying opportunity as well. Again, not all in, not all your margin, not every last dollar you had, but I could see adding, like if you had a position in Tesla, adding 10% to it or 5% to it at that time. That's what I did. I'll show that to you on a technical perspective as well. The company dropped below $700 as we have an eye on valuation and Shanghai. There's some complications over at Tesla, and they're going to have to do a really good job communicating this with investors, I think, over the next couple of months, because supply chain problems has forced a production halt in the Shanghai plant. Now, we've talked about this here on the show, where the Shanghai plant is on, and then it's off, and then it's on, and then it's off. And I believe that's probably the situation that we have going on in this plant. So this is certainly going to affect production. In fact, we saw that China passengers vehicles dropped over 21% year over year in the first week of May. Tesla produced 10,757 Chinese-made vehicles in April and sold about 1,500 of these cars. That is the fewest since April 2020, and they sold 68,000 cars in March of last year. So obviously the pandemic shutdown, not only having problems on Tesla actually making the cars, but it also looks like consumers in China have basically pulled back on buying these cars as well. Obviously, Tesla can export some of these vehicles or most of them out of China and into other markets, but just something to think about, the fact that one of Tesla's 3 production facilities is essentially either online and offline, and it's one of its biggest markets, certainly its key market outside of the United States, is essentially on lockdown as well. And I talked about how it would require a lot of communication. Well, we'll see in the upcoming earnings calls with Tesla how well they're able to explain this with investors, because we have to assume now Tesla's probably going to miss some earnings targets, some revenue targets. I tell you what, if they're still able to hit them, it would be impressive. But my guess is those are going to have to be reined in. Now, does that mean the stock is going to fall off a cliff on earnings? Not necessarily. Again, depends on how well management communicates that. I guarantee you the experience that Tesla has, it's something that they'll be talking about in the coming weeks ahead as we head into another earnings season, probably about 2 months away. Tesla places electric vehicle plans for India on hold. This is because they have a large tariff in place. The country of India does not want Tesla making these vehicles outside of India and importing them in. The thing we know about India, it's still kind of a developing market, okay? I think you look at like the average age of India, and it's actually a really young population. So it's a market that a company like Tesla will definitely want to be in as the younger demographic in India starts to build their wealth and get into like their late 30s, 40s, 50s. They'll probably have a large demand for Teslas. So it's a critical market for Tesla, but I still believe India is probably a little early for this type of product, especially at that price point. And it can still kind of be left in kind of the pocket of maybe kind of a bull case argument for Tesla that they'll likely have to expand manufacturing capabilities to India. And if and when they do that, that could present a fantastic opportunity for the company. Now, Tesla is reported to be taking offers in the U.S. for its semi-electric truck. I've seen a lot of people tweet that they've reserved one of these. I don't know if it's photoshopped or whatever. You need $5,000 down, and then you have to wire another, I think, 10 to 15,000 over the next couple of days. So it's not something that you can kind of, it's not like the other cars that Tesla makes where it's $100 or $200 reservation and it doesn't really matter. This is a pretty significant amount of money to reserve one of these, but it's interesting the fact that they're taking orders for this. We'll see if this shows up on Tesla's earnings. Obviously, these are really expensive. Okay, it goes without saying. These are $150,000, $180,000. I don't know the gross margins on these, but let's assume it's somewhere in the ballpark of their other automobiles in that 20 to 30% range. Well, I tell you what, you don't have to sell a ton of these at $150,000 to $180,000 with a $5,000 deposit and another 15 due in 30 days. Well, yeah, you're going to generate a ton of cash flows if that product ends up moving very well for Tesla. Now, let's start off the technical segment of the show. Some of you might be saying, well, where's Facebook? I'm going to start this off on the S&P 500. I'm going to give you a broad overview of where I think the markets are from a technical perspective. We are in this downward channel with the S&P 500. We've been in it, quite frankly, since the start of January. That was the top. It bottomed out at the end of January, and we've been making lower lows all along the way and lower sets of highs. So yesterday, we broke through the bottom of this channel, and I sent out a newsletter before the market opened today. I mean, I looked at futures, and it was obvious from a technical perspective. Every technical indicator was indicating we would get a bounce higher today on Friday, and that's exactly what you saw. You saw a green candle get put up today. We're barely back to where we were just earlier in the week. I would actually be surprised if this rally actually doesn't follow through into next week. I think at the very least we could get back up into the middle of this channel, which would take the S&P 500 from about 4,023 up to maybe 4,200. But we have to assume that this technical pattern will be in place until it's not. That means as we walk up to the middle or upper bars of this channel, we would expect a much larger red candle and downward trend to continue, making another lower sets of lows. So again, this isn't my opinion. This isn't me talking about what I hope will happen. I'm talking about from a technical pattern perspective. This is what's likely to happen over the next, I would say, 60 to 90 days. You'll make some highs. Everybody will feel good. It'll get rejected at a lower high and will come down and make a lower set of lows. How you want to play this is up to you. Now, I could certainly be wrong, and this could be the low. We could see the low for the S&P 500, and we rally all the way back to the highs. But I'll ask yourself, what really could be the catalyst behind that? With higher inflation, higher rates, Russia, the ongoing virus, all these types of things, doesn't seem like that's a probable outcome. I think we wave out sideways. So we'll keep that in mind as we move through this analysis with these stocks. So we'll pull over here to Facebook. We'll zoom into our most recent price action. We talked about how after earnings, the stock would gap up here, meet some resistance at 220. It's pulled back. It's pulled back kind of in the middle of a range. We'd expect Facebook continue to walk back down to the bottom of this range, make a new lower low that would take the stock south of about $170 per share. Now, it might take a pit stop next week. I showed you the technical chart on the S&P 500. That's looking like to me that we might see some follow through to the upside next week. That could take Facebook back up into this upper channel. I tell you what, if you do not get above about 210, 215, really more specifically, you need to get above $220 per share on this one and close up there and probably put some other candles up there to really start to say, well, maybe we're making a bottoming formation with Facebook. The far more likely scenario is that we either get walking up here next week or over the next 2 weeks, or we get rejected first thing next week and we retest a new low with Facebook. Do you buy down at those levels? Again, it depends on your other analysis of Facebook. Me personally, I much rather invest in companies that are not cutting costs, that are not reining in investment during this time. I'd actually appreciate it if a company was accelerating that investment. Now, moving over to Apple, this was kind of a remnants of my video that I recorded the other day. When Apple makes this big of a drawdown just over the last couple of months, well, historically, that's been a great buying opportunity. Now, I did step in on this one as you tagged south of $140. That is because $140 was support here. It was also the previous highs that we watched for many, many months on this show. We made these highs, and then with Apple, we kind of consolidated sideways between about 120 and 140. I mean, we basically just chopped here for a couple of months, and then once we got above 140, it was the launching pad. 140 was an area of support. Now, that doesn't mean that's the bottom. If we get a reversal in markets next week, Apple pulls into this box down here, south of, I would say, about 130 is your buying opportunity. And if you would ask me what's probable with Apple, I would say that is the probable, maybe not necessarily next week, but I would say over the next 30 to 60 days, I think it's actually probable that Apple stays in this downward chop, much like the S&P 500, makes lower lows and pulls into even better buying opportunities for Apple. But I did take a small bite of the apple here at 140. We'll see if that ends up working out. Now, in terms of Amazon, this is historically a gigantic drop for Amazon. I mean, this stock peak to trough has dropped over 40%, nearly 45%. And if we go back in history on Amazon, this company has done a lot of like 30%, 35% drawdown. We are now in a 40% drawdown on this stock, and it's taken us to a level of support, which basically the highs before COVID-19. So we've erased all the gains in market cap, all the gains in share price for Amazon. The stock has bounced about 10% over that level. I think if you get a pullback in Amazon back to the 2000-ish, again, 2000 is a big number. So the other thing to realize as well is all of Wall Street has this mark. Okay, I was watching CNBC. 2 or 3 commentators talked about this 2000 level. Everybody is watching that level. So if you don't have any shares of Amazon, it's a company you've wanted to invest in a while. Don't feel bad about stepping in a little early, because a lot of the times the number on the dot that everybody looking at Wall Street, well, people jump the gun on it. And that's kind of what we saw this week. It touched 2000 just briefly, and then boom, popped right back up. I would expect a retest of that area 2100, 2050, 2025. I tell you what, if you break below it, I would not be any hurry to move into Amazon. That is because if you break below it now on the way back up, it should be some resistance. A break below would just signal to technicals that, oh, that wasn't support. There are no buyers there. That would exhaust some flames out of this stock, in my opinion. You're buying at this 2000 level. If you have a really long time horizon, 10, 15, 20, 30 years, I don't think you're going to look back and regret buying Amazon at a south of $1 trillion valuation, or in this case, right around $1 trillion valuation. But in the shorter term, 30, 60, 90 days, this is a critical area with Amazon. We'll see how it holds up heading into next week. Now, there's many people that are going back to my old videos when I was saying back in January, in February, and in March, and in April, I said the buy zone. What have I been saying to you every week here whenever we look at the technical chart of NVIDIA is your box to buy NVIDIA is down here at the sideways consolidation. And I said it's south of about 160 per share. You could bump it up if you want. You can tighten it up. You could come all the way down here south of 140 if you really want to be conservative. But we wicked through that area this week. And yes, I did step in there and buy that because I simply have been saying that. I believe in having a plan and executing on it in the stock market. Now, will my purchase of NVIDIA here at 160 be the bottom, be the last time I buy it? Quite frankly, I'd be absolutely shocked if this trend line doesn't just continue to walk its way down with NVIDIA. Wouldn't shock me if we break through the bottom of this level of sideways consolidation down here at 120. None of that would shock me at all. But for months, I've been telling myself, not just here on the channel, I've been telling myself that I would take a bite of NVIDIA if it pulled into this box, and I did. And again, it was a 10% position. In my case, I have an IRA account. You're allowed $6,000 in deposits. A stock like NVIDIA, I would like at most 20 shares, so I stepped in and bought 2 shares. Moving on to Netflix, I tell you what, this longer term trend, we can keep adjusting it. It's there. We'll wait for some sideways consolidation with Netflix. I made the mistake. I got in here too soon. I thought we'd have a larger technical bounce off of this area. And after making this big of a move, I thought we'd have a more knee-jerk technical bounce. We did not with Netflix. I'll wait for the price to consolidate. Right now, you're still locked in kind of a downward trend with Netflix. Wouldn't surprise me if we keep making lower lows on that stock as well. Eventually might get into that one. We'll see. But the thing is all these other stocks that are really, really, really valuable have higher cash flows, higher profits, higher, position in their markets. We're looking at a Google here. Okay, this stock during the week was down over 27% from the highs. Look, guys, that is on record. That is about as low as it gets. Okay. Yeah, you could go all the way back to the great financial crisis. Google was down over 65%. But I tell you what, you get a pullback in that 25-30% range. Okay. I could believe your thesis could be we're having great financial crisis part 2. I can agree with you. It might be even worse than that. I could totally buy that. There's a ton of data that supports it. I agree with you. But if we're wrong, if this is somewhere in between, well, I tell you what, Google is likely going to make a bottom in this area, in the 25 to 35% down. There is an area of support down here at about $2,000 per share. That is my target on Google. Let's say I'm wrong. It doesn't ever get down to 2,000, at least in the shorter time frame. I'm talking about pre-split, and it moves its way up. Well, that's okay, because in the shorter term, there should be some resistance up here at $2,500 per share. I would expect this stock to get rejected, and if it makes this type of pattern, guess what, folks? You're just still in a downtrend with Google. For Google to get out of a downtrend, and quite frankly, this goes for almost all of the stocks that we're looking at, to get out of this red downtrend, okay, this stock is in a steeper downtrend than that. But to get out of this downtrend, you darn near need to go back to all-time highs with Google. And if anybody out there thinks stocks are going to go back to their all-time highs over the next 60 to 90 days, give me what you're smoking and what you're drinking. You got to be one of the most optimistic people on earth. And I'm not trying to take that away from you. I think that's a fantastic compliment. I'm not that optimistic. Same thing with Microsoft. The reason why I showed you the S&P 500 chart is a couple of these stocks are, especially when we're looking at the quote market, Apple and Microsoft, two of the largest companies we look at, they're making that technical pattern. They had this large runoff and now they're doing a very orderly downward channel. We're now at the bottom of the channel with Microsoft. We would expect this stock to bounce. There's an area of resistance up here at about 275. If that doesn't hold, you'll have this downward channel continue to work its way down. We would expect this stock to meet resistance there, sell off, making another set of lows. You don't really got lower end support with Microsoft until you get south of about $220 per share. So that's another $40 where this stock is. That's why I say this one's kind of in no man's land. That's why I also didn't take a stab at this stock. The stocks I took stabs at was an NVIDIA that pulled into the box that we had identified. Same thing with Apple. It pulled also into a box. You could have taken a stab at Amazon. I'm a little already overweight Amazon, fully allocated. I'm not fully allocated into Microsoft, but I'm thinking this downward channel continues. We get an opportunity south of 220. A lot of reasons to really like Microsoft at that area. We'll see if we get that opportunity. Now, the last stock that I took a stab at this week, I think you can guess which one it is, considering on the price action and considering what we've talked about numerous times here on the channel, the fact that you had a level of support here at 866. Now, we have sliced through this and gone back up with Tesla. It's a volatile stock. No longer are we wedging out. In fact, that was confirmed and broken. This stock is in a downtrend. So when I say I added Tesla, we're literally talking about one share, okay? Because with this company, I would like maybe 10 to 12 shares in an IRA account. Again, 6,000 in deposits. You can't go too crazy on one stock before you get really overweight in terms of your allocation for a year. So I'm buying this one at a time. When it pulls to the bottom of this channel, which it did earlier this week at about $700 per share, that was your signal to buy. I still think it's highly probable with a lot of these stocks, they make a rally to the top or the middle of the channel. There's no guarantee it gets all the way to the channel. In fact, with Tesla, it would make a lot of sense that it gets about to the middle of the channel at about 880 and then pulls back and makes another lower low. That would be another area where I would add maybe a little bit more, maybe 2 or 3 shares at this area. You have an area of support down here in the 600-ish range. That would be, in my opinion, an area where Tesla could potentially bottom out. Like shorter term, we're expecting some chop, but as we saw this week across the board, the vast majority of FAANG was flat, just like it has been. That is why 2 weeks ago, I posted a video here on the channel talking about how FAANG stocks could potentially be dead money. And that is because we don't have a lot of catalyst to push these things to their all-time highs. And at the same time, when they pull back to attractive valuations, we start looking at 4 or 5 years and those valuations make a lot of sense. This is a dream freaking come true. If you're my age or building up your wealth, if you're at that stage of life, this is where you accumulate these companies as they're on sale, accelerate any kind of 401k contribution you have. If you're individually managing stocks, I think you want to take nibbles on these pullbacks, understanding we could get a much, much, much deeper pullback, but without taking risk, there is no reward. So we'll take some of that risk on by buying small amounts of shares. Again, depending on your portfolio size, depending on your risk, depending on your age and your time frame. I'll let you make those judgments. But I did step in on 3 stocks this week, Tesla, NVIDIA, and Apple, in a very, very small way. And we'll see how that trends into next week. You can find links in the description down below to my Twitter, to my Instagram, and to my newsletter, where I keep you up to date on all of those things. Hopefully you guys enjoyed today's video. Back in soon with more. Good luck with your investments.